Hey guys, John Paulamy here, Actionable Intelligence Alert. Today is actually Sunday, but I did the market report yesterday. I'm just recording it today because of travel for 10/18/2019. I got an email from a guy, or in the comments section, I believe in one of the videos, and this is something I wanted to touch on anyways. He was talking about the comparisons between, gold and Bitcoin, and it kind of brought up the whole subject of what is money. And again, to go back to, if you don't define your terms properly, sometimes you don't know, well, many times you don't know what you're talking about. So what is money? Money is anything that is generally accepted as payment for goods, services, and repayment of debts. Now, throughout history, it hasn't necessarily been paper currency. You all know about the little stories about certain islanders in the Pacific using seashells, or gold and silver's been used, copper, iron coins, whatever, paper bills. I'm not going to go into the whole history, monetary history. It's beyond the scope of this short reality check. But what I wanted to do is get you thinking about what money is, because this is very important. As things progress technologically and we start talking about digital currencies, cryptocurrencies, gold and silver, and what I believe is the demise of the current monetary system, which has begun, in my view, and will play out over the next years and decades. The main use of money is as a medium of exchange, a unit of account, and a store of value. So, money comes, if you have a barter economy, it's hard for everybody to get value, because if you have a donkey and you want a loaf of bread, and if you gave the donkey for a loaf of bread, you would get the raw end of that deal. So Aristotle, the famous philosopher, wrote about money and devised 4 or 5 characteristics of what a good money is. Aristotle said that money, as a common measure of everything, makes things commensurable and makes it possible to equalize them. So think about it. We'll go back to the example of a guy that has a donkey and he wants a loaf of bread. Well, if he gives the donkey for the loaf of bread, it's not commensurable, the exchange. So with money and some of the characteristics of money, like divisibility, you are able to exchange value for value, and you don't have to have a barter economy. It makes things more efficient. It makes things more productive. Aristotle goes on and says the form of money is substance that has a telos, a purpose, that individuals have devised a unit that supplies a measure on the basis of which just exchange can take place. That's what we're talking about, just exchange. We're in a barter economy, and you don't necessarily have that. Aristotle thus maintains that everything can be expressed in the universal equivalent of money. He explains that money was introduced to satisfy the requirement that all items exchanged must be comparable in some way. And that's what we do. When we value things to $1, we say something's worth $20 or something's worth $10. People can compare in their minds the value and make it commensurable, the exchange, make it just, make it fair. So there's several rules that he came up with, not rules, but characteristics of good money. I mean, like I said, many things can be used as money just based on the circumstance of time or the area or whatever. Like I said, they use seashells in some islands. They used big rocks on other places. They've used cigarettes in, prison and prisoner of war camps. Various things have been used as mediums of exchange. But what Aristotle says for money, the best characteristics are listed below in this slide here. It must be durable. Money must stand the test of time and the elements. It must not fade, corrode, or change through time. If you use cigarettes or grain or something like that, insects or wear and tear or just entropy will, over time degrade the durability if you use those things. That's why gold and silver were used as money. They're very durable, especially gold. I mean, silver will tarnish, but gold doesn't change over the years. It is what it is. It's durable. It must be portable. Money must hold a high amount of worth relative to its weight and size. You know, if you look at, like I said, if you have a bunch of camels or cows, or if you want to use that as, you know, it's portable, but it's still not portable on you. I mean, you can carry 5 or 6 gold coins in your pocket, and you're representing almost $7,500 in relative dollar wealth. So portability is important. Being able to carry it, move it easily. It must be divisible. Money should be relatively easy to separate and recombine without affecting its fundamental characteristics. That's why we don't use, like masterpiece paintings as currency. You can't divide the Mona Lisa and then recombine it. You can do that with metal coins like gold and silver. You can melt them down, you can divide them. I mean, if you go on any website like Kitco, you can see you have 1 ounce coins, half ounce, quarter ounce, and 1/10 ounce. And this was true even throughout time. They divided the weights of the coins to represent different denominations or values. It must have an intrinsic value. It's kind of important. It has to have value in of itself. And I keep going back to saying gold and silver, and that's why gold and silver meets most of all of these requirements. If you look at various other forms of things that were used as money, they don't meet one or more of these characteristics. That's why gold was used as money for 5,000 years. And I was listening to a guy the other day on a podcast. I don't remember who it was, but he just went on one of these rants, about anti-gold rants again. It's like, well, with the advent of technology, people are just, millennials just aren't going to, they're going to want to, use cryptocurrencies. Everybody scorns these fiat currencies that these governments create and mandate, but cryptocurrency will be the end all be all. And I'm not sure, because I don't think it meets all these requirements. I mean, I look at Bitcoin for an example, because this is what the reader suggested. And again, as I've said from day one, let me clarify this for anybody that's a new listener. I made a lot of money off Bitcoin. I think Bitcoin as a speculative vehicle and as an idea is very interesting. It does meet some of these criteria, but it doesn't meet all of them. One of the problems with Bitcoin is, if you're going to use it as a medium of exchange, is that it fluctuates. So the volatility is so great that if you're a merchant accepting Bitcoin, you don't know what the value is going to be in a day or two or a week, just because of the fact that it's so volatile. I mean, as a speculative vehicle, as a method of moving money between states or people, I think it has a intrinsic value there. It has a utility, if you will. But as a medium of exchange and a store of value, I just don't see it right now. What I do see is, like what Rick Rule and some people at Sprott are trying to do, is combine gold and silver and crypto into a utility type token, where these tokens will represent a certain amount of gold in storage in a vault somewhere that's audited. Obviously, you have some counterparty risk there, but I think that is a possibility. What I see for a lot of cryptocurrency, what I see the future of, is the ability of creating these different tokens and coins that have traceability, and the fact that we can get rid of a lot of what's called friction in the financial markets. Perfect example is moving money. As I said, Bitcoin has a utility. Cryptocurrencies have a utility. The Chinese and Venezuelans, different people have used these cryptocurrencies to move wealth out of countries very easily. And, if you wanted to send $1,000 to a relative in, let's say Bangladesh or something, you have to pay an exorbitant amount of fees when you go to Western Union or something like that. But and that's the friction you're paying. You're paying that because they have almost a monopoly on those transfer operations. So the ability to remove friction from real estate transactions, banking transactions, financial transactions. I saw a thing the other day where a company came out with let's use an example. They had it as their advertisement. A 52 tops Mickey Mantle gem mint card that was worth hundreds of thousands of dollars. Now, the average person couldn't own that, but what they're doing, this particular outfit, is they're tokenizing that, and they're creating tokens as a certain amount that you could own 1/1000th of it or 1/10,000th of it, and so that you could participate in I guess, the perceived, if the thing went up in value over time, as these collectibles. Same thing I've seen in collectible cars. You wouldn't actually have the car, but you would have a 1/1000th interest secured by this token. And ostensibly, at some point in time, these tokens will trade somewhere, and there would be liquidity for these tokens. So I think there's some big possibilities around crypto technology, crypto coin technology, being used to reduce friction. I mean, because these big banks like Goldman Sachs, Citibank, I mean, they make tremendous amount of money just off fees and acting as rentiers in these financial markets. And I think that we're going to see more and more of the ability. You're going to see that happen with stocks and bonds. I think stuff's going to get tokenized. It's going to be a disruption that's coming. That's why these companies are getting involved in these cryptocurrencies. I mean, but as far as, Bitcoin or one of these cryptocurrencies supplementing, as a currency, I just don't see it right now. I'm not saying it won't happen, but it just, what happens if the power goes out? I mean, what happens if you'd still have gold and silver. It's still divisible. It's still portable. It still has intrinsic value. It's still durable. But if you don't have power because we had some big, you know, event from the sun that fried all electronics, what would you, in your stuff's on a hard drive, what are you supposed, in cold storage or whatever, what are you supposed to do? I just don't see it um, anytime soon. That's not to say it won't happen. There's a reason why precious metals have been thought of as money for 5,000 years, just because they meet these criteria. And it's just to flippantly say, well, the millennials who spend so much time on their phones and computers are the most electronic savvy generation of all time. They're just going to poo-poo gold and silver. I don't believe it. Central banks have been poo-pooing gold for forever. You can talk to any central banker and they will poo-poo gold, but yet they have it as one of their main assets and they continue to buy it, which I find very interesting. Maybe I'm just one of those old crumrudgerans that's over 50. That's why I think of gold the way I do, as a store of value, as an insurance policy against monetary shenanigans from sociopathic governments. But I think history's on my side. We'll have to see how cryptocurrencies develop. I'm not shy to change my thinking on it. Like I said, I recognize the speculative tenor of Bitcoin, if you will, and participated to great profit. So I think enough said on that. I think you really need to think about what is money, though, because one of the things I do want to point out in closing on the reality check this week is that the history of fiat currencies, paper money, and fiat currencies, and you should learn what these terms mean, is that they all eventually reach their intrinsic value, which is zero. There has not been a paper currency in the history of mankind that hasn't eventually went to zero, and that will mean the U.S. dollar too eventually. That just because our dollar is being depreciated in a very slow manner doesn't mean it doesn't eventually reach its intrinsic value. And we can, I've got into that before of why that happens, but that doesn't mean I'm expecting that to happen. I'm not making a market call. I'm just telling you that that's the historical fact. And to think that the United States, populated with the same humans, with the same motivations as the rest of the humans 100 billion humans that have existed since the dawn of man, I don't think that their motivations or their way of thinking or whatever is going to change from the other people that had the other failed currencies. So I think enough said on that. So Schlumberger had their third quarter earnings call. I pulled a few relevant comments out. It wasn't really that good. The reason why I like to highlight Schlumberger is because they are the world's largest oil field services company. So therefore, they have their finger on the pulse of the oil industry, if you will, and they provide all types of services to the oil and gas drilling and production industry. And a couple comments here from the conference call by the CEO. He said, in North America, we experienced strong offshore sales offset by minimal growth on land. Strong offshore sales offset by minimal growth on land. When they're talking about minimal growth on land, they're talking about shale. But notice they got strong offshore sales. Our international performance this quarter was very solid. At the closing of the quarter, half of our international markets have posted year-to-date double-digit revenue growth, which I found very interesting. You know, one of my main theses around oil is that there has been a lack of spending on replacing produced reserves, and that's going to jump up and bite us in the butt at some point in the future. That's the whole idea behind offshore oil drillers. The other comment here, the U.S. production growth rate has declined for the last 8 months and is expected to drop further in 2020 as a result of the reduced activity. Therefore, that's sort of a recession. And I didn't go through the rest of the paragraph. But basically, that's kind of jiving with what we've been seeing and what we've been talking about. That shale is not delivering, you know, the oil is there and can be produced, but it cannot be produced in a manner that is cash flow positive to the companies or profitable. And so what we have seen is this flurry of activity over the last decade, if you will, with hundreds of billions of dollars thrown at this with the promise that if we increase production, it's kind of like the internet bubble, guys. Remember when they had like pets.com and some of these other foolish companies, and they were valued just basically on eyeballs looking at the website. There was no revenue, and there was no, obviously, if there's no revenue, there's no cash flow or profits. And kind of the same things happened here. It's like this big, you know, the masters of the universe, the people on CNBC and all the financial media. Yeah, this is great. This is terrific. You know, the U.S. is going to be a net oil exporter, blah, blah, blah. But there's no profits and there's no cash flow. And so what we've seen is that, you know, maybe this thing is plateaued or the bubble's popped. The bankruptcies, the debt that's left, the fact that, you know, the big oil companies are moving in now. And I think that, you know, there's still going to be oil production, but growth is slowing down. Growth in production is slowing down. And this is what we've been talking about as the thesis. Depletion around the world doesn't stop and oil demand growth doesn't stop. But if, you know, these shale plays that were basically the only source of oil growth, new oil production growth over the last several years is plateauing or, you know, in the worst cases and going into decline, that doesn't bode well for oil prices being low for very much longer. This is from Basso Analytics. They track all the offshore markets. They had a jackup report that came out last week. Yeah, I think this was encouraging as what we've been expecting. So around 20 jackup contracts have been awarded since early September with high activity in the Middle East. Additional fixtures are expected shortly in West Africa and Southeast Asia. Here's the key term right here, or sentence, and day rates are increasing in most regions as utilization nears 80%. We expect market fundamentals to remain strong into 2020. This is exactly what we said was going to happen, and now it's happening. As utilization gets to 80% and above, day rates, you know, the market starts to tighten and day rates will start going up. Jackups, we said, would be the first because they're in shallow water, easier to work in, and less money that the oil companies have to invest. But then eventually, that as their need to replace the reserves continues to grow, they're going to move further offshore into the deep water, and then you're going to see the semi-submersibles and drill ships follow the rebound in jackups. So things are progressing as we thought they would. They're just not happening as fast as everybody would like, but it is happening. I wanted to talk about math and depletion, something people forget. Oil, as I've said about 1,000 times, is an extractive industry. You're extracting oil from reserves in the ground on this sphere that we live on called the Earth. You must find new reserves for those produced, or you go out of business. You just don't put an oil well and it just produces, 100 barrels a day forever. It has a production profile that's like a bell curve. It grows over time, then it peaks, it plateaus, and then it drops off over time. And that makes sense. So that's what we're talking about when we say depletion. The world uses every single day 100 million barrels per day of oil. Let me say that again. 100 million barrels a day is what's used every single day on this planet of oil. And without that oil, civilization grinds to a halt. People, you really need to think about this. Who would pick up your trash if the truck doesn't come? Who delivers the food to your grocery store? There's only enough food in that grocery store for 3 days without deliveries. Who does the industrial scale farming without diesel? I could go on and on. Demand growth, if you look in the BP Energy Review or other sources, it basically is 1 to 1.5 million barrels a day per year. You have to go out and find another 1 to 1.5 million barrels a day of new production and bring it online. Find it, develop it, and bring it online every year to satisfy just demand growth. What's that demand growth coming from? All these emerging and frontier markets where people are buying cars, where people are becoming consumers, where people are moving from the rural areas to the cities, and all the things that go along with that. That's where your demand growth is coming from. And then we have to talk about depletion. Depletion, like we said, if you just look at in total of the world oil production of 100 million barrels a day, is somewhere between 5 to 7% a year, depending on who you want to listen to. So in all total, depletion of the oil industry is 5 to 7% a year. So that's 5 to 7 million barrels of new production that has to be brought on every year just to counteract natural production or depletion. That depletion that happens every single year forever. So that's 5 to 7 million barrels, like I said, let's just call it 6 million barrels to chop it in the middle for illustrative purposes. So that's 6 million barrels of depletion that you have to replace every year. Now add another 1 to 1.5 million barrels of new demand growth. So you have to go out and find, develop, and bring online 7 to 7.5 million barrels a day of production. Guys, that's almost like, you have to bring on an Iraq every year. Iraq's about 6 million barrels, 5 to 6 million barrels. So an Iraq and a half, an Iraq and a Kuwait every year. You have to go out, find those new reserves, develop them, and put them on production. That is a tremendous amount of activity. That is a tremendous amount of oil that has to be found. And as I've illustrated in the past, we just have not been spending that kind of money for various reasons. We've had a glut of oil, and the shale explosion has really been the focus that's really accounted for a lot of this demand growth and for this compensation of depletion. So let's just do an exercise over the next 5 years at what we talked about here at 7 million barrels a year. We have to go out, find, and develop an additional 35 to 40 million barrels per day of new production that has to be replaced over the next 5 years. And that's where I think the opportunity is, especially in a beaten down industry like offshore oil drillers. 30% of our oil and gas comes from offshore. And now, we're talking about these shale plays not, being the end all be all. They're slowing down. I just went over that with the Schlumberger report. They're seeing that. And, we're slowly but surely seeing, the reserve life indexes of the major oil companies are shrinking. They have not been investing enough in new production to offset the declines that they have from their produced reserves. They have to go out and replace them. And there's been this no investment for years, for several years at least, and now at some point, we're going to get an oil shock, and that's where the opportunity is, in my view. So I just wanted to remind you that math, you got to think about these things a little bit deeper. Say, well, people think in these short-term headlines, shale oil, yeah, it's going to grow by 1 million barrels this year, and oil price is stuck at $50 or $60 a barrel. That's still a pretty good return if you look at a lot of the especially like the Canadian E&Ps that have basically, if you want to talk about a depression, this is like a complete wipeout. Kind of wanted to bring this to force. This is Eric Knodel. He's probably the last of the energy private equity funds in Canada. I think has one of the last funds that's still open. That shows you how bad the industry is. But he's been advocating that a lot of these companies up there are still cash flowing very nicely at current oil prices, and he's been advocating that they stop investing in new production and just take your cash flow from your wells that are in production and buy back pay down debt and buy back shares. And he's pointing out here that at least Bank of Montreal did some work on this, and it said a total Canadian E&P share repurchases total $5.8 billion year to date. And just list some of the companies that have share buybacks going. So, you can see this chart over here. It kind of shows the combined dividends and share buybacks, and you can see that's been increasing over time just in the last year and a half. And I think that's going to continue to go on because people are demanding. It's like, back to what Walter Schloss said, if you have these assets that are undervalued, well, there's only a few outcomes that you can be looking at. I mean, either somebody's going to come in and buy you out because it's so cheap, or your shares are so cheap that you should just be buying them yourselves instead of investing in new plant and equipment. And it's cheaper to buy your own reserves than it is to go out and develop more. So, at least as it applies to oil and gas. So I think that, with this industry that basically we rely on for civilization, it's not going away. It's growing, in fact. And it's just a pessimistic period, guys. It's just a depression in this patch, but it's going to pass. It is starting to recover. The hundreds of billions of dollars of investment that are needed to supply this civilization life-giving oil has just not happened. And at some point that becomes a problem. I don't know if it's tomorrow, 2 weeks from now, or 2 years from now, but it's inevitable that if you don't replace your reserves, the price is going to go up. And then, like I said before, it's not something that can be fixed in a month or 2 weeks. These are long lead time things, planning. You have to get certain equipment has to be put on order. I mean, it's a big endeavor to increase and get things moving if you've neglected and not doing it for years. Last but not least, uranium investors throwing in the towel. I saw a tweet, I think it might have been John Quakes or somebody. I think they were just lamenting that, the uranium spaces went really quiet and people are throwing in the towel. That's what they've done. They're bored. I've said this before. There's nothing happening, so people get bored and they leave. And they're not, and these are the punters. This is what happens. This is the best thing that can happen for people that have a long-term view on this and that actually get the thesis. Get the punters out so I can accumulate more. I went through this whole thing in gold in the late 90s. I would just buy gold every month, $250 an ounce, $265 an ounce, $270 an ounce, back to $250 an ounce. Is it ever going to go up? I don't know. I thought, yes, it would eventually go up. I thought it was undervalued. Okay, I didn't know what the catalyst was going to be, even for that gold move, but I thought this has intrinsic value, this has value relative to what else is available during the nutty internet times. And I thought to myself, this thing's going to flip eventually. I didn't know when. And I just kept stacking. We called it in the message boards and stuff, in the little forums that we used to go to as the gold bugs or whatever they called us. Just keep stacking. That's what people would say. Or the Bitcoin people, these hodlers. That's what they call themselves. I didn't know what was going to happen for sure, but I had the sense that, these crazy internet stocks were overvalued. The stock market was overvalued. It was a bubble. And what wasn't a bubble? What wasn't overvalued? Well, gold wasn't. Gold had been in a bear market for years. And I knew that, if I have this precious metal I can hold in a strong box hidden in my closet, it had value regardless. It wasn't ever going to go to zero. And inevitably, over the next 10 years or so, it went to $1,900 an ounce. The same thing's here in uranium, but this has even more utility. And people say, well, nothing's happening. I don't want to be involved in this. Where are you going to go? What are you buying in the everything bubble? I think this is a perfect thing for the average small investor. Let's look at reality. I'm not going to deep dive. I just pulled this out of an article in Power Magazine that I was reading. Just in the last 90 days, guys, in the nuclear power industry, you've had Unit 2 at Taishan. That's 1,750 megawatts. It came on operation September 7th. Shinkory 4, 1,400 megawatts. That's in Korea. Okay, that was August 29th. Yangjiang 6, 100 megawatts commenced operation. I didn't have the date, but it was in the last couple months. Unit 2, this is a Russian reactor. I can't pronounce it. Nova Vorenza Phase 2, 1,200 megawatts, July 31st. You had the first fully purposed floating reactor, fully purposed floating reactor, the academic Monsanov, I think it's called, 70 megawatts. It set sail for its operating port in northern Russia. These are all just in the last 70 or 80 days. Somebody had a picture of a pour going on a reactor in China, and they were saying like this is after 7 to 10 days, and they had a picture. They were pouring the bottom mat, I guess, part of the reactor base, and they had like probably 10 of these concrete pump tower things that pump concrete, and it was just like people were amazed that they could move this quickly. So what is there to lament? I mean, if you actually know what's going on, this is, what you expected, 5,500 megawatts, 7,000 megawatts of new nuclear came online in the last 90 days or 80 days. We had news this week, France to build 6 new EPR reactors over the next 15 years. India to ramp nuclear to 20 gigawatts. That's 20,000 megawatts by end of next decade. I mean, if you just pay attention to the news, it's like every day, more and more positive reinforcement is hitting this. Now, I'm not sure that a lot of people are invested in these or speculating in these juniors. If the price doesn't move, some of these are going to go out of business, guys. They don't have any money. That's why I've been advocating people at $25 a pound, just buy the uranium. Buy physical uranium via UPC or Yellowcake, or buy Kazatomprom on the London Exchange. I mean, and if this thing actually starts moving and gets a breakout, then you can rotate into the juniors. But to sit here and say that, I'm going to throw in the towel, where are you going to go? Are you going to go buy Facebook and get online and get yourself 2 shares of Amazon? I mean, this is what's undervalued. This is gold circa 1998. Undervalued relative to everything else. And this gives you protection. This has intrinsic value. People write me messages all the time. Well, John, what happens if we have a worldwide depression or economic, 2008? Guys, did the power go out in 2008? Did electricity stop getting sent to your house? Even in Venezuela and Zimbabwe, the electricity still stays on most of the time. And these places are basket cases. If you spend $3 to $5 billion on a reactor, you're not going to shut it off because you have an economic recession. The sunk cost is too high, guys. Think. So a guy can hide out in uranium. It's not going to go to zero. It has intrinsic value. And I'm just showing you what's happening. This isn't just some little 3-month spurt. This is going to happen every month. New reactors are coming online. Go to the WNA website. They have a tab. It's called New Nuclear. Every foundation that gets laid, every new reactor that's commissioning, every new reactor that hits the grid, they report it. It's new news every week. It's happening. But the one thing that I didn't put on here that you don't see on that website, you don't see any announcements of any new uranium mines being built or proposed or production increases happening at current mines. You don't see any news for that. Guys, it's a matter of time. Just keep buying physical uranium and good quality companies, and this will pay off. I don't know if it'll be a year. It might be 5 years, but the returns you're going to get. You cannot This industry is in liquidation. You're living off money that was spent 2 decades ago or a decade ago on exploration and mines that were built years ago. And when they deplete, there's nothing else there. No one's investing in new mines. That's going to create a huge air pocket that's going to lead to a huge surge in the uranium price. So that's it for this week. I hope you got something out of it. Appreciate it. It seems like my subscriber things, maybe YouTube let me out of the doghouse after the climate change negative comments I made in a couple of videos attacking Greta Thunberg, the new messiah. But appreciate the new subscribers, and hope you guys get some value out of this. And we look forward to seeing you in the comments section and interacting with you guys. So take it easy until next week. Thanks.